We have a fabulous panel of very experienced entrepreneurs and investors to debate the very important subject of whether or not the UK is ever going to catch up to the lofty heights of the Silicon Valley machine that delivers these fantastic global leaders in technology. Can we do the same? Can Europe really meet the sort of levels of global technology winners? Well, we're about to find out because we have the most fantastic selection of people here. I'm going to very briefly introduce everybody, but I think the best way to do this is for the individual panelists to give them a little bit of to give you a little bit of color about themselves. Starting at the far end, we have Rohan Silva, and he is an entrepreneur, founder of Second Home. I knew Rohan only electronically when he was working in government at Number 10. Shall we actually? No, I'll tell you what, I'm going to introduce everybody very briefly like that, and then we'll allow Rohan to talk a little bit about himself and move around the group. The next to Rohan's right, we have Margaret Rice-Jones, who is chairman of Skyscanner, a real potential global leader in its space. So I'm sure Margaret will have some strong views. We then have Alex McPherson, who's head of ventures at Octopus Investments and also an entrepreneur himself, I believe, once upon a time, okay. And then we have Sherry Kutu, who is definitely an entrepreneur and an investor. And then we have Chris Rogers, who very kindly came in at the last minute. But Chris is a US-based entrepreneur of incredible, impressive proportions, having founded Nextel. And he's now an investor in Europe, I understand, looking at European opportunities. So, global. Okay. So let's pass it back. Let's pass the baton back to Rohan. Give us a little bit of colour about your background, please. Thank you, Rohan.
Thanks, Dan. Hello, everyone. I, until last summer, was senior policy advisor to the Prime Minister. I worked on all areas of policy. I gave it up last summer to have a crack at earning an honest living away from politics and policy. And I'm really looking forward to this conversation because, in truth, a lot of what we did in government, and I think a lot of what the governments in New York and DC and elsewhere were doing was looking in a very friendly way at what was going on the other side of the pond and how through policy, in that case of government, but also in the world of business, there might be a cross-pollination, an exchange of ideas and capital across the water. So it's a great topic you've picked. And the company I've started, Second Home, which I might talk about a bit later, itself attempts to try and connect different entrepreneurial ecosystems around the world, not just America, but also Israel and elsewhere across Europe and beyond.
Thank you. Margaret.
Morning, everybody. I'm Margaret Rice-Jones. I was one of the rare female 10% on an engineering degree too long ago now. But then I really made my career going from engineering into general management, and interestingly, working mainly for large US corporations and having the joy of being considered international because I was based outside of North America. And yet seeing the real talent that existed over this side of the pond and the growth that we could create. We managed to double sales of a business in 3 years. And that real opportunity then led to me deciding that I was going to have a crack at being a CEO myself, and doing that for 3 years before taking the step to go into a much more plural career and really having the privilege to see European businesses that are started up, probably rather than start up. They've all got some established traction, but really helping those companies to go through the next stage of growth, and for two of them, helping them see them through the exit, strangely to US-based companies. So it's nice to see the US side of the pond recognizing the entrepreneurial talent that people over this side of the pond could build. And now I have I can only really describe it as a joy, actually, to be chairman of Skyscanner, which is it is a fabulous business, but a real, I think, example to the tech industry over here of what, with some determination, talent and creativity, you can succeed. And hopefully we'll talk a little bit more about that over the next hour.
Thank you.
Good morning, all. I'm Alex McPherson. I look after the ventures team at Octopus. And we are investors in European entrepreneurs, but we want to back those people and the teams they put around themselves to go and build global businesses. So whilst we invest in Europe, the majority, or a number of our businesses are looking for that global expansion. We have a third of those businesses who have operations already in the US. They're actually set up there, and they're selling into the US. Our businesses sell into a total of 52 different countries worldwide. So can the UK and Europe create significant businesses? I fundamentally believe, because I wouldn't be doing this otherwise, the answer is yes.
You're not allowed to answer that point yet, because you're only allowed to introduce yourself. I'm going to throw that question at you in a minute.
Fair enough.
Okay. I don't want to preempt anything. Sherry?
Thank you. So I'm a Canadian. I usually start up with that. I started out in Canada, came here to go to the London School of Economics, where I studied economics. When I was there, I discovered what entrepreneurship was all about. So I learned about entrepreneurship in the UK, and chose to be a programmer right after my MSc. Did that for a few years, probably quite badly, but it was a really good base. Then I worked in corporate finance for a while. Then I went back to the States and studied entrepreneurial finance and entrepreneurial management. Came back here, started up my first gig, which sold to Euromoney. It now has operations in 70 countries. And then I started up my second one, which was the most oversubscribed IPO on the main market at the time. At the time, it was fashionable to do joint flotations, so I floated on both NASDAQ and the London main market, subsequently delisted from NASDAQ, which we can talk about if you like. Since then, I have become an angel investor in a portfolio. I found it was very suitable, given that I was also a mother of 3 children, to be a portfolio person and an angel, rather than full-time CEO. I make 3 or 4 investments a year. I've invested in about 55 companies, both here and in the US. Last year, the turnover was $3.5 billion. I'm usually the first check in. I currently sit on the board of the London Stock Exchange Group, which is really fun. It's a beautiful market, very, very international. And Zoopla, I recently joined them on their board when they floated, but I was also the first angel into Zoopla, so it's really wonderful to be with them at the start. And although some of the investors considered it an exit, as far as I'm concerned, when you float, it's the start of just a different sort of journey, because I think we are here for the long run if we want to grow big, fabulous global companies. As an entrepreneur, I'm recently started something called Founders for Schools, which I'm very, very excited about, because it helps address the skills gap in our country. And it basically puts people who have founded businesses into schools for free for the teachers. So the teachers often don't know how to find people who run businesses, and they may not be aware that there are people who run businesses around them. And we provide a free service so that they can find entrepreneurs to come in and talk to their kids about what I think is the #1 most fabulous career that they should be considering alongside engineering or government or consulting or perhaps even banking. But it's one of the top careers that absolutely should be on the menu for the schools, but I often find it's not. Anyway, that's what I'm entrepreneurially doing at the moment, and have just finished a report called the Scale Up Report, which is out on Monday, which I'm looking forward to launching enormously.
Scale Up?
Scale Up Report talks about the economic growth that comes out of growing companies really big rather than just starting them.
Well, we'll look forward to that. That'll be very interesting. So finally, with you, Chris, if you wouldn't mind, a little bit of background.
Yep, I'm Chris Rogers. It'll be a very little bit of background. Obviously, I think the reason I'm here is because we're a Silicon Valley-based VC, and I'm American, and I'm going to be the target, it looks like. So thanks for that. I am also certainly the oldest person in the room, and therefore have that 30 years of wireless experience, both as an entrepreneur and as an investor. Nextel was a big win, as was pointed out, but my focus now is on tech investing, and we do look around the world, and so I do have some perspective on this because we are familiar with a lot of markets that are trying to replicate the San Francisco Silicon Valley model through government policy, through spending, through whatever it is, university programs, and so I'll be interested to hear and participate in this.
Great, thank you. So I'm sure you'll agree that we have, the most capable, experienced, and informative group who can give us great insight into the following questions. And I will pass this first question on to Alex because he was so keen to answer it in the first place anyway. Why do you invest, or do you invest on both sides of the Atlantic? I'm not sure you do, actually. But if you do, why do you? And what makes you choose one over the other? Why the UK over the US, and why the other way around?
Well, we invest into European entrepreneurs, so proximity to us matters. So in terms of our reaction to investing is entering into a partnership with those entrepreneurs to go and build big businesses. So having that proximity and the fact you can work closely with those teams as they build out their product and prove their marketplace in order to then take it internationally. And one of the things that clearly are big markets out in the US. So those businesses naturally tend to make a move there. But at the same point, there's markets to the east. And if you think about the consumer markets they're absolutely enormous. So the next question is, how can we assist those businesses to expand out into Asia and address those markets? So whether it's going into Singapore, Tokyo, or indeed China, that's something that I think we as European entrepreneurs need to address.
Okay, maybe I'll pass the question on to Sherry because I think you do invest across the globe today. Maybe you can give us some insight into whether or not you think that there is a distinction between UK or US entrepreneurs, and if there is a distinction in the entrepreneurial culture or focus, what it might be, and if it's not about culture and focus and the support infrastructure that entrepreneurs get in those different markets, then what other factors are important to allow these entrepreneurs to flourish and come up with the great ideas that they do and be successful?
So I invest on both sides of the pond, as I mentioned, and I do it when I find a fabulous entrepreneur who has the ability to put together an amazing team and chase really hard for a long time after a goal that's worth pursuing. That is a large market. I tend to like global businesses a lot. So where you can prove that the product get a product market fit in one country, that's called the pilot country, and then do a rapid geographic rollout across a bunch of other countries. That's what I really enjoy doing. And I think that there are a number of different niches that allow you to do that. So, and so that's what I look for. Is there a difference between people in the UK being able to spot a market opportunity than there are people in the US being able to spot a market opportunity that's big and that they can put a good solution together for? There is no difference between being able to spot an opportunity. I think that there are differences between the ecosystems at the moment, which is entirely capable of being addressed. One of the things that we recently in the UK per capita passed the US on the ability to start firms. So we used to be behind the US in how many firms per capita we started. We've now passed the US on that. What I would like to see to be our next goal is passing them on the extent to which we help them grow their revenues across a number of different geographies so that they can serve their products to hundreds of millions of people. Because if a product works in one country, I see no reason why it shouldn't also work in another with a little bit of help into, well, when you go into Germany, this is how you think about it, this is who you need to talk about. It's just getting market products distributed and sometimes a little bit bespoke for a new market, for a new set of people. And if they want it in one country, why wouldn't they want it in another? I see no difference inherently between the entrepreneurs or their abilities between this side and that side of the Atlantic, sorry.
You sort of alluded to a difference in the infrastructure or the support system around UK versus US. Can you elaborate on that for us?
There is a skills shortage of people here who have started up companies and grown them to 500, 1,000 employees, or let's say 250 million or 500 million. That shortage doesn't exist in other countries. So we need to think about how we can access that because A, as role models, it's important. B, as just ways of giving tips and advice to people as they go down that path. So I think we need to use our scarce resources and perhaps find a way of getting access to those scarce resources a little bit better. I think the other thing that is the case is there are 1 million open jobs right now. If you look at Adzuna, they list 990,000 open positions right now in the UK. If you ask the startups why they're not able to fill those positions, they say that the people that are applying for the jobs don't have the skills that are required to do the jobs. If we were able to address that by our educational system producing more people that could do those jobs, that would help everybody enormously. If you just filled those 990,000 open jobs right now, the boost to the economy would be enormous. There are some great initiatives, actually even started up by Rohan over there. He brought General Assembly over here last year or a couple of years ago. They reskill people who currently don't have the skill sets required by the scale-ups, but they reskill them in 3 or 4 months and make them, and they're all employable, minutes after they graduate. So also there's some amazing informal programs that we have borrowed from the US and elsewhere that can help reskill the people so that they can work so that we can fill these open positions that are currently stopping. What the companies are saying is, I could fill this customer order, but I need to find someone to hire to fill the customer order. If they can't hire that person, it stops them from filling that order. And that is not a complaint that we hear very often we hear it a little bit from the US, but we hear it more often here. Okay. It happens too often, and we can and should address that.
Okay, that's very interesting. So there's 2 areas, I think, that Sherry was saying is a barrier here. One is a skills shortage in the UK, and the other is a shortage of seasoned entrepreneurs who've done it before and can be back to do it again. Is that right?
I think make themselves available to those who are trying to do it for the first time is more the point I would make.
Okay.
Mentors, advisors, directors.
Great. Okay, thank you very much. So Chris, if you wouldn't mind, give us the US perspective here, US investor perspective.
Right. Well, actually, I think it's a mistake to focus on the U.S. If the issue here is, will the U.K. ever exceed the San Francisco Silicon Valley experience, that's pretty narrow. And I would probably say no, not a chance. But there's so much outside of those 2 areas. And if you look at the investment levels in China or other parts of South Asia, you're going to see a trajectory that is much more likely to exceed the California experience. But since I do see a lot of efforts from governmental and private efforts to try to replicate the ecosystem, and I would be quite negative on the influence of those. Most of what I see are efforts to bring things over from the valley. And if you really look at the timeline, most of those things came after the big successes of the valley. They're sort of add-on programs that people think are helping, but actually came because there was such an ecosystem there. That doesn't mean that it's a bad thing to invest here. In fact, I think it's a very good thing. and I think the 2 points that you make, actually, the people with experience is more important than the incubator here or the smart camp there or whatever it is. I think, and I have been doing business back and forth in the UK for a lot of years, and there is, I really don't think there's a shortage of that type of entrepreneurial success experience. It may be culturally, it's not as available to the entrepreneurs.
There are a shortage of people who have scaled companies here successfully. There's just the numbers, there are fewer of them, so there are more scarce resource. That's the point. I would violently agree with you on we should not copy what's going on in the US. I think we should learn from successful endeavors in a lot of different countries, think hard about what we're doing here, and therefore thoughtfully plot out how we can produce more global winners. And I did say global winners. I made the point of not saying just in the US because we're quite a small country, and if you look at where I think the best places are for us to focus our efforts on, fintech, health tech, and ed tech, those are global markets. They're not just in the US, and any globally dominant company would be wrong to focus just on Europe or just on Asia or just on the US. The ones that will win will be global in nature and in thought and in mind frame, I think.
Rohan.
Yeah, I mean, on this point about copying the US, certainly in government, it's something that we would never even thought of. Clusters, technology clusters, and economies are path dependent, and they grow up in their own way. What we tried to do, and maybe it's the wrong thing to do, was to look at the barriers in the way of growth. And so one barrier was obviously, for example, the shortage of early stage risk capital, the friends, family, fools money going into startups over here. So what did we do? Well, we created tax breaks that don't exist in America. They're the most generous tax breaks of any country in the world for angel investment, the EIS and the seed EIS tax breaks. EIS was already there, but we made it much more generous, and we created the seed EIS tax break, massively generous. My little startup has benefited from that like thousands of others. We looked at entrepreneurial talent, and we created an entrepreneur visa. The Americans still don't have a startup visa. We have a great entrepreneur visa that's helping people come over here. We opened up government procurement to small businesses. We opened up government data. There's a whole set of things that we did, and there's a bunch more as well to do with culture and banging the drum on behalf of entrepreneurship, getting great entrepreneurs and investors honours through the honours system. Just one of many, many ways in which we tried to change the culture, not to copy America. I think, if anything, London is most like New York, by the way. I think that's where the strongest parallel is, because London has something going for it that no American city has. The closest is New York, which is that it's a centre for just about every industry you can think of, from finance to media to politics to advertising to art to fashion and so on. And I think what's exciting is in the interplay between those fields. California, Silicon Valley, has less of that. It's much more of a monoculture. There's strengths to that monoculture, but there's also great weaknesses. London's unlikely to be a place in the short term. It's a place where, I don't know, semiconductors are being designed. Fine. But it is likely to be, and already is, an epicenter for fintech in a way that Silicon Valley is unlikely to be. So, I'm incredibly bullish. Like lots of you, probably like all of you, all of us could be based in the Valley right now or in New York right now. We're lucky like that. I think London is the best place in the world right now to be starting a business. And part of the reason, a small part, are things like the tax breaks we created. But the biggest part is the culture change that's happening. And it's happening of its own volition. And it's happening as a result of, and as an expression of, the collision of different fields. And that can only happen here. And it's an incredibly exciting thing.
Margaret, I'd like to ask you two questions. I'd like to bring you in now with two completely new areas.
Although I wanted to say something to the last one,
well,
but I'll squeeze that in my answer anyway.
Okay, you can start with that. But I do want to bring you in on 2 points. The first is, do British companies or European companies have more difficulty raising the sort of sums, the larger sums, the bigger sums, than their US counterparts? That's question number one. Number two, what about the valuation? So you've got capital availability in size and valuations that form part of that capital raising exercise. But before you answer that question, you may want to make the comment that you had.
It's partly addressed to that, so I'll answer the question, weave the rest in. I agree completely with the comment you made about it being global companies. But I think you also have to look at the route from being a startup to becoming a global company. And I think it's no surprise or coincidence that companies based in China and companies based in the US have been more successful faster. And I think it comes for two reasons. One is capital and the availability of capital, not just for the early seed stage, because I think a lot of that has been fixed, but the growth capital stage, I think it has been much harder for people to get that B round and the larger C round to be successful. And with due respect to VCs, what I see is European VCs being much more fixated on exiting within the fund life cycle that invested in the fund and not being as flexible about rolling on to the next fund, which means that, when you look at the fact it's taken about 8 years on average to create most unicorns in the US, and fund life cycles are only 10 years, you've got a fundamental challenge there of will VCs based in Europe hang in for long enough to see the company grow big enough, or are they more likely to say, there's a good offer on the table, why don't you take it? So I do think that's one point about access to capital. But I think this whole point of early access to a homogeneous market while you're in the early stages of growth is very important. In the US, you can get pretty sizable without having to deal with different government regulations, different cultures, different languages. As one CEO said to me in Ireland, he said, when you start up a business in Ireland, you learn how to export pretty quickly. Right? But with that, and he'd done a fabulous job and actually conquered America for the sector that he was in. But it does bring a degree of complexity and challenge to your business when you start one up in the UK or Ireland very early on. And I do think that we as a community and government could do a lot more to help people through that. Okay, I want to go and work in Germany and start an office in Germany. Well, what does that mean? How do I do that? I want to acquire a business in Budapest. What does that mean? What do I need to look out for? And so I think that scaling challenge of getting big beyond your home local market actually is a barrier to a number of companies getting through that stage of growth that frankly is just easier in the US or in China. You can get there in a far simpler and with a far simpler approach to your business.
Alec, what's your view on that?
Yeah, I think the big debate here is actually where is the UK and the European ecosystem by comparison to the US? And the reality is that there's been a entrepreneurial venture community in the Valley for a very long time. What you've seen in London, I think what's so exciting is the fact that since the financial crisis, you have an incredibly vibrant entrepreneurial society. And a lot of that has been put in place at the startup scene, a lot of the initiatives with regards to government. And the question now is how do we make it easier for those businesses to scale up, which comes to the heart of Sherry's report. And if you look at a report that came out last week from the CBRE, 68% of the job growth is created by those businesses that have a turnover between 1 million and 20 million. Now, how can those businesses go and scale and go to those different jurisdictions and become global businesses? And if you start to talk about unicorns, we're seeing businesses like Criteo, Spotify, Zoopla, to name some, Just Eat, Appliances Online, which are all now billion-dollar companies that have been created in the last 6 or 7 years. And those are starting to happen. They just didn't occur previously, or there were very, very few. And that's something that I think is exciting. And therefore, are we able to catch up? In certain sectors, I think absolutely. We have specialisms here where London leads the world. And we mentioned fintech previously. I think that's something where we can really define things.
Okay, I'm going to bypass Sherry and go straight to Chris on this point, because I want the US perspective on what's been just said about capital availability and related.
Okay, let's switch topics to how about sunshine and lack of rain? Because I think those are two factors that are going to be inescapable in sort of the lifestyle entrepreneurial decision. But we are mixing up a lot of arguments here, and if the question is, can there be global startups coming from the UK? Absolutely, why not? There are some disadvantages. I completely agree that it is easier if in your home market you actually can make an enormous business in and of itself. That is an advantage that you have in the US, you have it in India, you have it in China. And I completely agree that availability of capital is an important differentiator. When I am pressed by entrepreneurs in different places who are struggling after many cultures have the seed and angel taken care of, whether it's directly from the government or tax breaks to get it indirect, very few have the growth stage capital, very few. And so it's hard for me right now not to advise entrepreneurs, yes, if you can, move your business right out there to California, because you're going to find availability of capital is much easier. And that is just the way it is right now.
Is that, sorry, I think it's important just to understand, is that availability of capital related to just a greater propensity for investors to back entrepreneurs irrespective of the model or the opportunity? Or is that down to the fact that there is a greater understanding of the opportunities that these entrepreneurs are putting forward for investment?
Oh, it's certainly both. I mean, there's more dumb money and more smart money out there.
I'm on the next plane.
Yeah. No, I mean, that's clear. There is. I don't think anybody's going to argue about that.
Well,
there is more capital there.
Yeah, there is a greater quantum of capital over there. But for Series A, certainly, seed and Series A, investors are very unlikely to invest in companies that aren't based close by. And if the advice is move over, well, that might work for some companies, but not for all. There's been an incredible uptick in the amount of venture capital, the number of venture capital funds in London, and the amount of venture capital available in London over the last 5 years. There's only 3 places in the world, I'd say, that actually have a venture capital industry in the world, proper industry: California, London, and Beijing. New York has some funds, nothing like the kind of number that London has. And of course, when you're talking about Series B, so 20 million plus, Series C, at that stage, capital is much more global. So just yesterday, TransferWise, one of the great, one of dozens now of European unicorns, just yesterday announced a $50 million funding round from Sequoia, a Silicon Valley-based company. Where's TransferWise based? It's next to Old Street Roundabout. So it got $50 million at a $1 billion valuation from a company on the West Coast. So at that stage, there is an issue in the UK and Europe at Series B and C. It's not huge, but there is an issue there. There isn't a shortage of capital in London. There's far more capital in London than there is in the Valley, far more, right? But the question is, where do all of you and where do the institutions here direct that money? And evaluation is simply an expression of our confidence in the future. And if we believe that we can grow great companies, and there are dozens of billion-dollar tech companies in Europe, if we believe that, then the valuations will follow and the capital will follow. We have nothing to fear but fear itself. This is up to us. We can change this ourselves, all of us. Very straightforward. And the number of new early-stage VC funds, I can think of 10 that have started over the last year that focus on seed and A, Hoxton Ventures, Pasha. I'm thinking of the last maybe 2 years. A huge number of early-stage funds have opened that follow on from the seed angel money. Will there be more Series B, C funds? Absolutely. Google Ventures has just opened in London. They're really going to be focused on the growth stage capital. This is an incredibly dynamic moment, and the capital is there. And I think the opportunities will follow.
Margaret,
Can I just make a comment on the valuation point?
Sure.
Yeah, I really don't think that certainly at the latter stages of a startup there is any valuation difference anymore. I think the impact of some of the US players like Sequoia coming over and investing has evened that up, and I don't think there is anything to fear at all. I don't think we're downgraded.
So let me ask you a question on that point. I mean, in both cases, we're talking about US investors investing in UK or European businesses. Is that the US investors are taking a bigger picture view of the European entrepreneur's business and saying, you know what, we think this business is worth $1 billion, we'll put 50 million in, but there's no UK investor fighting to get a piece of that at that valuation?
Hey, I mean, if you want to, there's at that kind of stage, you could be talking to Axel, you could be talking to Index. There's a whole bunch of British funds at that stage who can put that kind of money in. What you've got to do as an entrepreneur, and I'm the same, any of you are entrepreneurs, you shop around. And the good news at Series B and C is that money really is global. Series C, Seed and A, more localized, more hands-on, more mentoring. The kind of stuff that Sherry does is quite hard to do if someone's at the other side of the world.
So, yeah. Margaret, you're chairman of Skyscanner. That is a great British hope, right? It is competing on the world stage. It has a fantastic platform that users view in the same way as other comparison, travel sites. It isn't considered a British company in the eyes of the internet consumer. They just see it as another platform. What's your take on that business? Where is that business going in terms of its valuation? What are the challenges that you're seeing there? Those that you can disclose to this group that are holding it back or not holding it back or giving it the ability to flourish that may or may not be based around its location?
The biggest challenge I think we have is hiring the right people. That finding people with the right technical skills is a huge issue. There are just not enough of them, men or women. We are not producing enough people with the data analysis and the computer science, and we're not producing enough people that want to go into those much more metric-driven way. Even marketing in the internet economy becomes much more metrics-driven, and stopping people being allowed to stop doing maths at 16 in this country is a huge issue. So I think availability of talent is probably for us number 1, 2, and 3. We don't have any problem with capital. We turn people away every day who are offering capital. And actually, interestingly, we have Sequoia as an investor. They invested last year. And one of the big things that we've seen as a change since we had them as an investor is our ability to attract talent from the Valley. Because Sequoia are an investor, key Valley talent we can now interview and bring over because we just have, I say, such a lack of people who really, truly understand the internet economy and what it means in this country. We need to grow that ecosystem of people more.
I'm going to change tack slightly here, and I want to understand about exit. So Sherry's got a question.
I've got a question. We've been talking about, again, availability of capital, and I think that if you've got your customers, you've got the talent, you can get the money. There is a difference between at what stage you are. If you're at an early stage and you're up to, say, 50 employees, you worry about capital. Once you're beyond that and you've got the momentum, then getting capital is not hard. The point that I would worry about if I were Rohan's old boss is if we let all the C rounds and D rounds be filled by the Sequoias, when there's a flotation, those funds will flow into other economies rather than this economy. And if, as is absolutely the case, a greater number of people have been located in other countries for the product development, et cetera, those people will be elsewhere, and the talent and the money that would otherwise flow back into our economy will not come here. So I think it is an issue, the paucity of which there are later stage funds that are domiciled here. It's not a problem for the scale-ups because they can get it from the US because they've got great ideas, great markets, great teams, and great companies. But it is a problem for our economy over the next 15, 20 years, and it will limit our growth and our ability to reinvest in ourselves.
So that was actually the question I was about to introduce. You sort of segued me very nicely there. That you're a board member of the London Stock Exchange, and that is one route of, not exit, because I don't want to be controversial. It is the start of a new journey, but it is a way for early stage investors to get liquidity. There are other ways, of course, which is the sale of the business to a buyer. From my perspective, I see those two factors as very different in the European context for entrepreneurs, being an entrepreneur myself. And it's, I'd like to know the panel's views on whether you think there is a propensity for European entrepreneurs to sell out or go public elsewhere rather than really see through their ambitions to the sort of monster opportunities that maybe the investors who started backing them in the very early days hoped that they would go on to achieve. And I'll start that one with Alec, because I don't want to leave him out.
Let me take the point with regards to providing some liquidity on the way up or selling out too early. I think that's something that we've seen in Europe in the past, is that people have built businesses to, if I say the £100 million level, that's that sort of level. And acquirers are coming for the businesses at that point in time, and people have accepted those offers. As an entrepreneur with a large stake in those businesses, you're building that up. There's a certain point of, how far up the ladder do you want to be? How big is the fall as an entrepreneur with, maybe turning down £20 million out on exit after, a period of an earn-out? So what we've seen a lot of and been party to, and we did it with Zoopla as an investor there, is making sure there's liquidity for founders and angels and those early investors as that business is growing. So they're able to take some money out in order to go back and actually really go for it and look to build those 500 million, billion-dollar businesses. And that's really important. I think that's been also a shift that you've seen in the investing community, being prepared to put money into the business, whereby it's providing exits or liquidity for early investors and entrepreneurs. And that enables them to have the confidence to say, right, yeah, I really can go for this. And that's a fundamental shift that we see.
Is that happening? Do you think that's happening?
Oh, absolutely.
Okay. Sherry, what is your view as I mentioned, the board director of the London stock market, and clearly trying to attract those companies that we have seen in some cases, either internationally or local based, moving to the US markets to get valuations that might be richer. I'm not sure that's actually true. It might be a myth. I'd like your opinion on it. But why is that, and what can we do to provide that later stage capital to those businesses?
Well, I think I probably talk about Zoopla, which obviously recently floated here, but you know that I'm on the advisory board of Care.com and LinkedIn.com, both of which took the decision to float on the New York Stock Exchange. Yeah. It is a decision. It's not solely the entrepreneur's decision where they end up floating. The investors often have a very big say in that. But the decision that you're taking is, where is the best place for my company to thrive? I don't know. I know you asked about King. I don't know why they went elsewhere. If it was valuation, that I don't want to name King per se, but chasing valuations is not a smart thing to do. Chasing where is the best place for your company to base itself from, what support will you get in the aftermarket? For me, as the entrepreneur who wants to float my company, I don't focus on a transaction. I focus on where I'm going to operate and who will help me buy that company in Germany, who will help me buy that company in France, where is the infrastructure and the financing and the advisors available to help me with my global ambitions. And it's a highly personal decision for each company. So King, one assumes, must have looked at the US market and decided that that was the best place for them, as did Alibaba recently. Zoopla, we looked here could have floated in a bunch of different places, a very, very healthy business, and thought that this was the best environment from which to continue to operate the business.
I want to challenge you.
From the LS,
I'm going to challenge you now.
Go ahead.
The first is Zoopla's a UK business which has a UK revenues. It doesn't have, as far as I'm aware, it doesn't have any US revenues. So I don't think it's even a possibility that it could have floated in the US.
There are other stock exchanges across Europe.
So okay, I don't know how. Yes, that's true, but I don't think they have the same. I think there are certain markets of which London, New York, Hong Kong, are dominant in the sort of flotation market. You go to any other markets, we're talking about smaller, potentially smaller and very local activities. So if you're saying that Zoopla really considered the US market, I would probably say, just with my knowledge, it's unlikely.
I wasn't saying that they did. I don't want to speak specifically for any of the companies that I'm on the board of, because that's not. But I can talk in general. I think as an entrepreneur, I would choose my stock market depending on the particular company. And if we want to go into the London Stock Exchange sort of point of view, there is amazing support available in the UK in the financial services. We have a lot of advisors who have international connections and financiers who can help companies as they get to the size of Skyscanner and beyond, so that you can go from 100 million in revenue to 250 million in revenue to 500 million in revenue and to $1 billion in revenue and even 10 billion in revenue. That is possible to do within London. Probably, it is. And if I had those ambitions as an entrepreneur, I would want to be in London. And I do think that London is the best place. I would love to think that within 10 years' time, it would be really hard for a Care.com or a LinkedIn to not consider London. That's where my ambition is. I think we can get there.
I'd like to just give my view on that. I'm not really meant to, I know, but I think that it's important. I'm supposed to just moderate here, but I think it's important to just look at the facts for a moment. The big international IPOs aren't attracted to the, other than mining and certain sectors, are not attracted to the UK market. We didn't see Twitter come to the UK. We didn't see Alibaba choose the UK. We didn't see, and what's more disturbing is that the big international British tech businesses often choose to list in America when they have business in America and they can justify an investor base over there. So that's when I'd like to bring Chris in, because you've got.
I think it's customer base that they were thinking about rather than investor base. But if your market is in,
I think it's both.
If your market's in the US, then it does make sense to be there. But if you've got a global market, then I think it makes sense to consider London.
Well, I think that's the point. How can we make sure that the London stock market, the UK, can retain the growth companies that we generate and create to see their sort of later stage activities play out on the public markets in the UK?
Okay, can I make a point on that? Because I think part of it is about role models and the lack of role models. If you're in the valley and you haven't bought your vineyard in Napa yet, you're nobody, right? You're going to carry on. You're either going to do another startup or you're going to reject the offer that would make you 50 million, and you're going to carry on. And yet in this country, we just don't celebrate entrepreneurial success. We don't take those role models and we don't say, these are great people, kids, follow these people. And so I think many entrepreneurs sell out way too early, partly sometimes with a little bit of pressure from funds and things like that. But I think just because they don't have the role models that say, stop, like Twitter did, turn down that bid. Yeah, keep going.
Just on
we heard the point about celebrating entrepreneurship, I think, is something that all of us get to do all the time, and culture is a result of the way we interact with each other. We had a lot of complaints, for example, about the stock exchange and the issue with British growing companies choosing to list elsewhere. It really is a phenomenon, or a historic phenomenon. And so we looked at it, and it was clear that one of the things putting off British companies from listing on the stock market here was that if you're a high growth firm, you had to list at least 25% of your equity on the market in order to list. Whereas in the States, you could list more like 10%. So we introduced, with the London Stock Exchange, a high growth segment of the London Stock Exchange. And there's a whole set of companies now on that on-ramp towards listing. And when you're on the on-ramp, you have radically reduced reporting and governance requirements to help you get towards, the pain, frankly, of being a publicly listed company. And so there are things we can always do. It's so easy for us to complain. There is still a big challenge, I think, which is, I'm sure many of you or some of you are from banks. There is still a challenge in London where the coverage, the analyst coverage of tech companies is still pretty weak. The investment banks aren't allocating enough resource to that. It's a chicken and egg problem, of course, because there's not as many companies listed here as there could be. There's not as much liquidity. So why bother allocating resource to tech analysts for that sector? And it's a chicken and egg problem. That has to be addressed. And I think Barclays in particular, who I know are sponsoring this event, are doing really good things in that area in London. But that is a challenge. There are very specific things that we can do. It's easy to complain. It's easy to say that things aren't good enough. There are really, really simple things that we can do that can make a difference. And a bunch of them have been done, and there's a bunch more to do. And that's a very exciting thing.
Okay, so hold on. We've got to go to Q&A shortly, but before we do, there's two things. Sherry's been signalling she wants to make a comment, which is great. We're going to take that comment in a second. Then I'm going to go around through all of you, ask you the question, and I want to hear your answer. Then we'll go to QA, okay? So, Sherry?
So on role models, I mentioned Founders for Schools earlier. Getting role models into schools is really important. What happens after one hour session of meeting the entrepreneurs is 3 times the percentage of kids subsequently choose to study a STEM subject. One hour event. We can and do make a difference really, really easily. So we can do a lot more of that. Specifically on the LSE, we introduced last year our 1,000 companies to watch. And that celebrates the 1,000 companies that we think have a capacity to float. In addition to that, we run a program called the Elite Program with Imperial, and that takes the cohort of these these promising companies and puts them through a informal executive education for 2 years that talks to them about how they do talent, how they expand the team, what they need to do to get into foreign markets. And that was copied from something done in Italy, so again, not looking always to the US, and Bocconi University, because in Italy they don't have a VC culture, they have family-run culture. They had set up a program to help their high-potential companies grow really large, and we thought that looked an interesting program, and we brought it over to the UK last year. We just launched the second cohort. Those should be everywhere. They shouldn't just be in London. They should be in Cambridge. They should be in Manchester. They should be in Edinburgh. They should be in Glasgow, because the ecosystems are local that support these things going out. But there are a lot of things that are being done. And on Monday, I'm publishing 30 case studies of what's being done and what should be done more of to get lots more fabulous companies. So watch this space. I will most certainly send you, and anybody else who wants a copy, a copy.
Okay. Right. Well, now we get to the point where we're going to get where the rubber hits the road, as they say in America. And seeing as we have an American here sitting next to me, and the topic involves the U.S. market as well, I thought that was an appropriate thing to say. We'll start with Rohan. I'm going to ask you the question. I just want a simple yes, no. I don't want you to qualify it too much. Can European tech ever catch up or even surpass the U.S. technology franchise?
Yes.
Margaret?
Yes.
Alec?
Yes.
Sherry?
Yes.
Here we go.
I honestly couldn't care less. Because I know when it does, I'll be gone.
Okay. Before we go to QA, my view is absolutely yes. I think it can. I do think there's some things that need to be put in place. I think mentoring is a very important thing all the way through. I think the culture around entrepreneurs is missing an important fact here in the UK, which is that when I started my first company back at the age of 20, my mother burst into tears how I could be leaving my job in advertising. The idea of it. Okay, that was a long time ago. Culture has moved on dramatically since then here in the UK, but I think that it is about the support infrastructure around going out, starting a business, failing, fine, do it again. Failing, do it again. It's often that the third time an entrepreneur has actually started a business that they have their greatest success. And I think that sort of, repeat entrepreneurial activity is something that should be encouraged and supported. I agree, well, as Rohan knows, I was very much a proponent of the idea of getting British banks to write research on technology and deeper areas of technology, and because that's the area I come from, of fintech and so on, so that the investor community is better informed at the public market level to get better visibility. A $44 billion float for Twitter with limited revenues relatively would be a very difficult thing to achieve in the UK. $160 billion float for Alibaba would be very difficult, not because the capital isn't available, but because the investors here in the UK, in my opinion, don't quite get the big picture of how much revenue can be generated, how big the companies can get. And I think that that's just, lacking there. It's a chicken and egg, needs to get done. So there's I had to say something. I couldn't sit here quietly. I was very controversial in the last one because I was the only one saying yes, everyone else was saying no. Anyway, let's now move to QA. We've got a question at the back there, sir.
Hi, Tarek Said. I work for the Antenna Group. We mainly own media assets in Southern and Eastern Europe, and we've just joined an alliance of European broadcasters like Channel 4 in the UK, ProSieben, MTG in Scandinavia. And one of the main reasons that alliance tries to do media for equity deals for digital businesses, and one of the main reasons that alliance was put together was looking at the scale argument. We think a lot of European talent is going to the US because they just see the customer scale in the US, and we want to try and bring some of that scale to Europe, and this is just one small way of doing that. We touched on it. We talked more about sort of capital scale than customer scale, but it was touched on. Does the panel think that is a big issue, or it's something we should be concerned about, and how can European businesses do more, not just the government or banks, but European businesses do more to keep talent here from that perspective?
Margaret, why don't you answer that one? I think it's quite...
Yeah, I mean, I do think it's an issue. I said so sort of earlier on. I think lack of the homogeneous market is a challenge. And whilst we may have a single European market from the perspective of physically shipping stuff around, we definitely don't have one when it comes to actually the process of selling that stuff to a consumer. And also the legislation around employing people in a particular country and understanding the subtleties of markets where stock incentives just don't motivate because of the tax position on them, for example. And so, I'd love to see more commonality of that, but also people just helping each other with simple advice like, well, actually, I've seen that problem before, and here's how we got around it. So I think there's two ways of solving it. One is probably longer term, if governments and the European Union were to look at sort of harmonisation of even things like data protection policy, frankly, which is very different. And then secondly is just actually us as a community figuring out that we can help each other more with just very downright practical advice between us, particularly in areas and sectors where we don't actually compete with each other but may have faced the same challenges.
Just a quick notice for everybody. In about 3 minutes' time, we're going to do a minute silence. 2 minutes' time, we're going to do a minute silence.
It's a 2 minute silence, sorry.
Oh, okay. In 3 minutes' time, we're doing a 2 minute silence. Or is it 2 minutes, 3 minute silence? Anybody got a quick question? Yes.
What said is about private equity as an investor class that London is particularly well suited to?
Who would like to pick? Rohan?
London is a real centre for private equity, and it does play a really important role, I think, in the life cycle of companies. Typically, when you're talking about tech companies, you're talking about equity rather than debt. I think a really interesting category that doesn't, there's not much of in London, and there could be, and I think it's a real commercial opportunity. All these things are market opportunities. Is venture debt. And I don't know if that's something Octopus provides, but certainly it's Silicon Valley Bank, and there's one other player I think in the UK that really provides venture debt. I think that as a halfway house between PE and VC is a really important part of the the cycle. And I think it's something that will emerge here. I mean, all the things we're talking about, if you believe that there are commercial opportunities at hand, and there are, then rational people are rational at least some of the time, will respond to that. And it might take a little bit of time, it might take a year, it might take 3, it might take slightly longer than you like, but it will happen. The adjustment, the new equilibrium will form. I'm ultimately very bullish about what a set of smart people can do together. And I think venture debt is going to be one of those.
Alec, can I have your view?
Yeah, I mean, just very quickly on the private equity, I think this comes down to mindset of the investors as well. Venture investors, as Rohan said, was about equity and it's about growth. Private equity tends to be about cash flows that are coming through and then financial engineering. So it is a different mindset. And that's something I think you see also in the listed markets, and it's about changing that mindset, and that is starting to happen.
I wanted to just hear comments about early stage investing and the fact that, in my experience, there's very little investment from funds in pre-revenue companies here. And any comments about that? Is it changing? It seems like that's a huge difference between Silicon Valley and here in terms of the startups there not having that immediate pressure in their early funding.
There are, I don't know, 20 VC funds in London, all of whose portfolios are the majority. If you take Index, for example, just one outfit in London. I spent a year at Index as entrepreneur in residence, which is a Ponzi way of saying I had a desk, and while I worked out what I was doing to start my company. But I was very lucky because you get to see everything that comes in and every pitch and so on. Index have 200 companies in their portfolio, of whom probably 150 are pre-revenue. Almost every company that comes in and pitches is pre-revenue. That'll be the same at every VC fund in London. Everything that Sherry invests in, presumably, almost everything, will be pre-revenue. A Glinton and I, or the beginnings of...
Well, hang on a second. Sorry, I've got to be contentious here. I know Index very well. I know most of the players in the UK market. I think pre-revenue is one factor, but there's also pre-anything. You just said a glint in your eye. I don't think there's any investors in the UK, professional ones, other than angels, that will have an entrepreneur walking with a piece of paper and back them on an idea. I've never seen. Do you?
There's loads.
An example for that would be Secret Escapes, who came in with a piece of paper, who we backed to start with.
But I think
Wellington came. Wellington.
There are plenty of people who do that.
I think that probably happens in almost any environment, but I think your point is that in spite of the enormous amount of capital maybe in London and the UK, the capital focused on early stage venture is significantly greater in the US and in Silicon Valley, and that makes your odds seemingly better. And it's hard to avoid that. I mean, that is the situation today.
There's also a point about funds versus angels. I mean, angels, I think most VC funds in London are focused at Series A and beyond. Some do a bit of seed. But I think a mistake people often make is to go to VC funds at that very, very early stage. For two reasons. Partly, they don't tend to invest at the hyper early. But also, you want the hands-on mentoring and support that you really get from an angel. I was very lucky. We raised almost £4 million in about 3 weeks for my startup from angels. No institutional money at all. And we didn't approach institutions because, to be honest, I'm a new entrepreneur and I wanted a set of people who have the time and inclination to put their arm around me from time to time and give me a slap and tell me what I'm doing wrong. And angels can do that in a way that VC funds, all the will in the world, they're busier, bigger outfits.
There's $1 billion per annum that goes into the UK economy from angels. It shouldn't be overlooked. And it focuses on pre-revenue.
I wasn't referring to angels. I was referring to the Index.
Well, but you'd spoken about early stage pre-revenue. The place for it is angels. And they often know VCs because many of their deals previously will have gone to them. So after the angels, or in addition to the angels, they can help you figure out which of the VCs, if you want to go the VC route, is the appropriate one. And don't forget that only, I think it's 1% of the fastest 500 growing companies in the US are venture-backed. So it's not the only option, and it shouldn't predominate your thinking.
Right, we're going over here, but we've got one more question from the lady here on the second row.
I had 2 questions, but I just wanted to
You're only
hear from
allowed
people
one.
about Europe, actually, because we've talked a little bit about Europe, but it's mainly about UK and London, and thinking about the present situation with Europe and whether we're, with the referendum and the different governments and different parties' approaches to this at the moment, what the panel thinks about that. My other area of interest was on alternative finance and whether people have seen, there's a new Nesta report out and how that's been looked at. I think that's 1.7 billion that's going into the startup and support economies for SMEs, etc. as well, and how people think about that.
Alec first, if you wouldn't mind.
Which question?
Whichever one you
I'll
like.
take the second. I'll
Choose
take the
which one you
alternative
like. She was only
financing
allowed one.
I think any, this all comes back to how do we create a burgeoning entrepreneurial ecosystem. So all forms of alternative finance are useful, and that goes from whether it be the crowdfunding, whether it be the peer-to-peer lending, whether it be the asset finance, through to venture debt that's been mentioned. All of it has its part to play. What we need is that across the entire chain through to the IPO market, so that actually big businesses can be built in the UK and Europe.
Okay. I think we need to bring
Europe.
this to a close. So okay.
Europe, 500 million. I think that my products should go to all of them, and if the product works here, it should be able to I want to be able to get it to another place very easily. So it's just more people that potentially want my fabulous products that I've worked really hard to create.
Right, thank you very much. I think we have to bring it to a close. Thank you.